very active early investor, or specifically in emerging markets, but I do a fair amount in Silicon Valley. Also, I want to salute Alife and the Paklaunch team for putting these amazing conversations together and all that he's done to really sort of bring you all and the Pakistani ecosystem to the attention of the world. And it's a wonderful thing. So I want to thank him all for being with us today in this amazing conversation that we'll be recording. We'll also take some questions, so don't hesitate to put something in the Q&A box, overall. As a quick framer, I just want to say, I every so often I have these moments where I'm sitting on a plane. I'm like, it's almost impossible for me to fathom how different the world is, certainly the world of investment, as compared to if we had this very conversation even 3 years ago, right? I think we're in a more disciplined era than the go-go days, but sometimes I'm not so sure. Many VCs are looking more inward, especially here in America, but that may be changing. I think a lot of VCs are struggling to find what their thesis is in this environment right now, which is certainly different. Obviously, AI is massively different in everything that's going on right now. At a macro level, we have a rise of industrial policy and an engagement with governments almost ahead of launch in a way that would not have been much of the conversation 3 or 4 years ago overall. We have an infrastructural divide between China and certainly America, but other parts of the world right now. And a lot of exciting stuff continues to happen in rising markets in Southeast Asia, South Asia, Latin America, Africa, beyond. And yet the exits are still naggingly slow. And so it's an amazing kind of a period. But as you all know, in a period of uncertainty is where the massive opportunity is. And we could not have anybody better to help us think through this a little bit than Deena here today. So Deena, thank you. I mean, as always, just a treat to be with you.
It's a pleasure. And I would say we could not have anyone better than yourself to think through that, Chris. So delighted to be in conversation with you.
Oh, very kind. I want to start, if you don't mind, Deena, because just to right set folks a little bit about you personally. And I think you came into VC at a very different time in history and a very distinct time. And I'm wondering if you could just tell folks briefly why you went this route and why Lux.
Yeah, absolutely. I'll try to keep it short. And when I say Chris and I go way back, I mean, we really go way back. I first met Chris in 2010 when I was working at the State Department. So let me start really from that moment and kind of how that led me to venture, and then I can answer your question more succinctly. So for those that haven't seen my background kind of prior to tech, let's just say I wasn't necessarily setting myself up for that career in terms of my educational trajectory. My undergrad degree was in social studies and Near Eastern languages and civilizations, which translates into the least technical degree you could get at Harvard. After that, I went to grad school to study Arab studies at Georgetown, and I was considering doing a PhD in anthropology. So it was very much on, this philological academic track, wasn't even remotely thinking about the private sector, investing, let alone tech. Except for one thing. My passion and focus was really on the region. And while I was in grad school, I was actually interning as a journalist with the BBC and happened to be covering the White House, as one does in DC, when President Obama gave this big speech in Cairo in 2009. And perhaps some of you remember it. I know Chris certainly does. That was a watershed moment for me. It was a moment when I realized I didn't want to be writing the story. I wanted to be a part of it. And it was a moment in which we were the US government was setting forth sort of a new way of doing development and diplomacy with the Muslim world, with the Arab world, focused on technology and entrepreneurship and really grounded in dignity. And as someone who grew up in Silicon Valley, whose parents are originally from Iraq, who'd started a company in college, it turned out not to be quite the success, but, I still had this idea that tech and entrepreneurship could be a way of driving better impact. I felt like I wanted to be a part of that. So that's what I ended up doing. And I joined the team that started the effort that came out of that speech, which was called Partners for a New Beginning, turned into the Global Entrepreneurship Summit. That's the context in which Chris and I first met. So I spent a few years in the US government working on that effort. And then something happened, 2011, the Arab Spring. So I happened to be an Arab American working in the US government, focused on how can, tech and entrepreneurship build bridges with the region, and then witnessing how technology was actually helping to catalyze change. Of course, we all had a lot more optimism in tech at that time than we do now. But that, coupled with the fact that I was coming back out to Silicon Valley consistently before my job at the State Department, stepping foot here and feeling the energy and the optimism and the incredible mecca of talent that Silicon Valley had become, I knew that if I wanted to drive toward impact and change, I needed to figure this tech thing out. And that's how I ended up joining Google in 2012. Story for another time how that happened, because there were a lot of rejections along the way, and Chris remembers that journey very well. But I ended up at Google and got to build some really cool things on the product side. And how I got into venture was by way of helping start Google Health, and realizing through that process that despite the promise and opportunity within big tech, it was actually incredible entrepreneurs who were really going to have an impact in these intractable industries like healthcare, and that I was meeting individuals bootstrapped in some cases, doing far more than the team of hundreds that I was working with. And I wanted to be a part of that. And so that's how I ultimately got into venture, starting off at Google Ventures and then eventually joining Lux.
It's interesting with your background, particularly with policy, and I think just by your incredible intellectual curiosity, the macro and some of the things I described in the introduction were very macro, are important, but sometimes can be distracting from the act of investing. I've had very good venture capitalists who say that I actually ignore the macro and I just have to hone in on the micro and on the very good entrepreneur. And I wonder how you navigate all the changes I've articulated, but at the same time hone in on, is this or not a good woman to back? Like, how do you think about that sort of balance in this particularly uncertain macro environment?
It's a really good question. I think I will say for any investor, it depends. And so I'll speak from my experience, which is perhaps anomalous in that I'm a multi-stage investor. So for those that are not familiar with Lux, we have been around about 24 years. We invest from pre-seed to pre-IPO. So we can literally do $50,000 checks and $200 million checks. And there's no separate growth and early stage teams. So you're looking at the GP who does it all, including my other peers as well. So, I'm sitting on a dozen or so boards that range from seed to getting ready to go public. And what that means is there's a different calculus and a different way of thinking across those stages. Certainly, if I'm looking to be the first check in into an individual or into a market, I don't want to say I ignore the macro. I don't think you should ever ignore the macro, but your calculus is different because you're investing in something that needs to make sense 10 plus years down the road. If I'm investing in a company that's, gearing up to go, for an exit there, of course the macro matters because it's all about, what is venture? You buy low and you sell high. And so if you're buying high and, you have to think about the macro in a different way. And then, related to the topic that you started off with in terms of AI and all of that, like, again, I think these things help inform the theses and the areas of interest and even the geos of interest. If you're noticing that, perhaps the US market is oversaturated in a certain way, you start to turn towards other opportunities. So I think it's all, they're all inputs that go into it, but it really depends on the entry point.
I think it was interesting that you talked about the goals to buy low and sell high. And yet I would argue we went through this period of almost 3 years where we were acting as if we were buying high because it could only go up. And I honestly, I have to tell you, I kind of blame me and venture capitalists a little bit for this. I think we were driving entrepreneurs to chase GMV. We were driving entrepreneurs just to think about the next round would always come. And I think we lost some sense of discipline. And the good news in this environment might be it's a more disciplined era. On the other hand, maybe not. Human beings are human beings. Right side set us right now and where you think we are in terms of the kinds of entrepreneurs you want to look for in an environment where we're not necessarily chasing everybody for growth's sake, and yet growth is important. But we also have almost a first principles that we expect out of the entrepreneurs.
We're still doing it, Chris. For any of us that are focused on AI right now, they're very much kind of 2019 to 2021 vibes there. That being said, I think, many of us believe, there are some contrarians there, but many of us believe that AI is, the sort of semiconductor, moment, right? That there is or as some might say, for better or worse, a web 1.0 moment. So there are going to be some big winners here. It's extraordinary to see the pace of innovation, the pace of adoption and all of that. But what that means is there are some companies that are still sort of looking a lot like the chasing growth companies of that era. I blame myself too. We all blame ourselves. That was, that was the norm for a while. And for many years, we kept thinking it was going to end and it didn't end. Like, every 3 months, a company would be marked up 3 to 4x. I do agree with you, though, that the return to discipline where it applies is very helpful. It is important. It is refreshing. I hope that it will mean that we're, entering that era where we have more discipline, where we'll get back to the returns of, eras before. I think that applies a bit more in healthcare, which is a world that you and I know very well, and a world in which I frankly am a little worried about what long-term, multiples look like here. When you see companies trading for less than cash in the public markets, it's kind of hard not to ignore that macro when you're investing in companies, only because, like, again, our goal is, to eventually have an exit. And if there are no exit opportunities, what does that mean? So I am confident and hopeful in this sort of discipline around fundamentals, which should have been there all along. And I hope this stays. But given what I'm seeing in AI, I wouldn't be surprised if we quickly forget.
I'm going to come at AI in a moment separately, but I want to pull on the string one time harder because I can tell you, even in my world, sometimes what I do is I look at the go-go companies that were actually chasing real problems. And I'm now looking at the next generation of entrepreneurs who are coming at the same problems as the other ones implode. And I'm sad to say that's about as close thesis as I have right now. What theses do you and Lux have? Is it all now becoming AI, everything sort of that gravitates to that? Or are you looking at the next generation of entrepreneurs for different kinds of things than if we had this conversation 3 years ago?
We're looking for a lot of things. And so, AI means a lot, right? And there are companies that will just do AI applied anywhere. It'll do application layers. We have a bunch of areas that we're actively looking into. And one of the reasons, which I didn't answer your earlier question about why Lux, but one of the reasons I was very excited to join Lux and why I'm constantly, intellectually stimulated and challenged every day is because of that contrarian notion and because of the excitement we have around the non-obvious. And so if we were all just doing AI all the time, that wouldn't be true to our to our sort of DNA in doing the contrarian and the non-obvious. So one of the thesis areas that Josh Wolf, our founding partner, has talked about in our last quarterly letter, which we actually published sort of redacted versions of online, is around this theory of maintenance. And so that's really interesting and contrarian for a contrarian fund who invests in sort of deep tech and sci-fi to talk about maintenance. But that's a theme.
What does it mean?
It's a theme that we think about in terms of, I mean, there are many different ways to apply this idea of maintenance. You can think of it in the context of healthcare, like how do you maintain your health, right? So it's not just about this breakthrough innovation that will get you somewhere. How do you stay there? You can think of it in the context of automation, right? So we automate, but then what does that mean long-term for the industry? You can think about it in the context of manufacturing. You can think about it in the context of, sort of picks and shovels types of industries. You can think about it in the context of biotech. And so, thinking about the supply chain for GLP-1s, where amazing breakthrough drugs, but what happens when you can't get your medication? How do you think about that? Think about it in the context of like baby formula and what happened with those shortages. So those are all things that we're thinking about. That's one theme. And then in terms of, I'm still quite bullish broadly and what is known as health tech or digital health. I think that particular phrase will cease to exist eventually as all healthcare becomes digital. But I think about the maintenance of these large legacy companies. If you think about the payers and the pharma and the provider systems, how can you maintain their innovation over time? So whether it, that could be AI, it could be AI for prior auth, it could be sort of billing automation and so on. But those are the kinds of things that I think about.
I mean, on AI, I think overall, let's get into that rabbit hole a bit because I think it's essential to how to think about it is essential overall. I hear, because particularly early stage investors like to, complain a lot and everything else. Like, obviously the big LLMs, the big makers, and they're all doing this and getting billions of dollars. There's some infrastructure, chips, that kind of stuff that's doing. But for the rest of us, like almost everything we see is effectively an app that's a more version of many things we see already.
Yeah.
Hard to get excited about that.
Yeah.
And yet I sometimes think they're being a little bit lazy. Like if we were to say to ourselves, not only can AI make things more efficient, but if we were to pretend, for example, AI came first, we might be coming to a lot of the solutions in the areas that are much more creative as opposed to efficiency to that which already exists. And I
Mm.
wonder, how do you think about AI in that? Is it mostly for you as you size it up about kind of efficiencies and at this stage, like make things easier and cheaper in order to deliver? Or are you starting to think of use cases that might become different and exciting?
Both, definitely both. Certainly, I'll speak to sort of the healthcare side of it and then outside of healthcare. But from the healthcare side of things, it's the way I've always thought about technology in general applied to health, which is very different than how it's applied to other areas. AI ultimately is a means to an end, and that end is how can we improve quality of life? How can we improve human health? And so I think about AI in terms of, I'll give you a concrete example. We are investors in a company called Waymark, which was founded by Dr. Rajai Batniji and Dr. Sanjay Basu. And they are a company ultimately that's innovating around Medicaid. I wouldn't call them an AI company. And yet they have some of the most advanced AI that I've seen around predicting ED risk. They have a product called Signal, which they published in Nature around a 90% accuracy rate and being able to predict ED admissions and ultimately reduce not only cost of healthcare, but again, improve human quality of life. They also have an AI tool for prior auth, which again, there's a whole bunch of companies that are doing just that. So those are like, the sort of AI for things in healthcare as opposed to just AI. On the biotech side, of course, there's AI for drug discovery and on the hardware side, there's some really interesting applications in robotics. But we also invest in companies like Runway, which is a company that's enabling creative output through AI, through visual and film and things like that. So I think we're just beginning to scratch the surface on what can be done there.
One of our guests, James Ansel, was sort of pulling on this string a little bit further. I mean, I think in some respects, we conflate obviously AI and generative AI, and there is distinction. As you think about healthcare and the kind of distinctions, do you have other examples of what you sort of see now, either in an existing portfolio company or again, theses that you're beginning to explore, where in fact there are other concrete examples that perhaps more on the generative AI could make a difference on the health side?
Generative AI applied to health, I think, is still really early days.
Yeah.
And I think it remains to be seen, even if I were to give you an example, like what that means in the long run. I'll give you an example of AI, perhaps not as explicitly generative, but I think that's really making a difference in healthcare, which is a company in my portfolio called Alife. And Alife was founded by Paxton Mader York, who was a star product manager at Auris, another one of our companies that was using computer vision applied to robotic surgery. And he has had a lifelong fascination with IVF because his younger brother was an IVF baby. And so while he was at HBS, won their, business plan competition by sort of thinking through a model whereby you could apply computer vision to actually embryo selection and optimization, and has now assembled an incredible all-star team with some of the best scientists in this field and is applying AI on that side of things, as well as to developing vertical software solutions to increase kind of efficiency among, clinicians in the IVF space, which is, a breakthrough in an industry that badly needs it, which was one of the most incredible innovations of our generation, and yet has not really seen much innovation since, that first IVF baby.
What you and I would have been meeting 10 years ago with entrepreneurs, we almost had a presumption. We talked about this in the Middle East and elsewhere, that right now, not even eventually, right now, every company is really kind of a tech company. You talk about tech as a separate thing. Are we at the stage where every company is sort of an AI company? And when you meet with entrepreneurs, do you expect, is it now a question of inquiry where you expect these entrepreneurs to tell you how they're thinking about AI, both in their current operation and whether it affects them in the time frame you care about?
I don't think we're there yet. I think every company feels like they need to have it. Almost every slide of every company that I'm seeing, every pitch deck has an AI slide, but many of us can sort of smell right through that. And I think that's just hype. And so, I think every company should think through what their AI strategy is. If not right now, how do they get disrupted by that down the road? And every company that we're already invested in, especially in the services space that did not have an AI play needs to figure out what that means for their industry, for their company and their work as well. So I would say not quite yet. Well, we may get there. We probably will. But even the term AI is just going to be like, it just is what it is. Like, and AI is not new, of course. Like, I was working on the AI/ML team at Google like 10 years ago. And, ultimately all computation is to some extent AI. So I do think it will become just sort of part of how everything is done.
The North Star, obviously, of our existence, if we do this business right, is the entrepreneurs. And so we've already gotten several questions, actually, people have asked, how do you evaluate founders? Really talk about the woman and man, the individual. How are you thinking about when you meet that person for the first time? What are you looking for that sort of makes you want to learn more? And in absence of which, you may say this meeting is over.
Mm-hmm. Yeah, I mean, I think there are a lot of things. Authenticity is probably first and foremost, right? So, is this a hammer looking for a nail, or is this an individual who, of all the things in the world they could be doing, there are many ways to make a living in this world. Why this? Why now? So, particularly in health, but really with anything I'm looking at, I love to see like a deep personal connection to what this individual is doing. So I'll give you an example. Kate Ryder, who's the CEO and founder of Maven Clinic, a mom of 3. She developed this company as she was going through her own kind of conception and fertility struggles. And ultimately, the evolution of the company matched the evolution of her own parenting experience. So that's really interesting. Summer Health, founded by Ellen De Silva, also a mom of 3 who, had so many, with 2 working parents, so many wasted hours and days dealing with, schlepping to the pediatrician and the hospital, and really wanted this sort of text-based approach to caring for kids. Again, I mentioned Paxton and the Alife example, this lifelong fascination. So these are all kind of examples of that. So authenticity, passion, of course. Again, this is such a frankly irrational thing to do to start a company. You really need to just have that, because that plugs into number 3, which is resilience. And so if there are examples of that are evident, or perhaps that come through and related to that is sort of this chip on your shoulder. We talk about, as a firm, chips on shoulders make chips in pockets. But I think if you look at the even just the investors or the whole team at Lux, this is something that really is a consistent quality across all of us, even though we come from such crazy different backgrounds, is that all of us kind of have something to prove in our own way. And I love to see that in these entrepreneurs as well. And again, it's not always obvious. It's not always, that you came from a certain background and so on. So we try to find different ways to do that. I also love to just chemistry is really important. Very well, Chris, that who you choose, on your board and on your cap table, these are people you will be in deep, long relationships with, for better and for worse. And so people that you respect, that you want to enjoy doing things, doing work with, is really important. And so, I think if there's like a lack of respect in the process of just fundraising, and, that's just not going to work for me.
An interesting conversation with a colleague of ours also who's done a lot of venture, also had the chip on your shoulder thing. And we had this kind of conversation, which is, chip on the shoulder is like, you can slow me down, but you can't stop me. Like it's in my teeth. I got to let this go, and everything else, I just got to prove it, and whatever it may be. But it also can have ramifications on culture. Like it can have ramifications on team. Where have you found the balance between that chip in the shoulder that is the thing that drives us so well, but at the same time, you may be worried that they won't listen, they won't be actually constructive in ways that you value as well?
Yeah, I mean, and this is where it's a little bit more of an art than a science, because that is something that's important. And I do think actually that elements of that come through, again, in the process of getting to know a founder through fundraising. In fact, I recently was very deep with a company, and ultimately, was almost there, ready to make a decision. And I decided not to. And a big part of that was the sort of dynamic with the founder in the process of getting to know them. So, not being very responsive to introductions I was making, for example, not, being respectful or accommodating with, when and where we would meet up, having days go by without, like, responsiveness is something for me personally, that's not for everyone, but to me, responsiveness is a love language. Just like, being on time is to me a matter of respect for someone else's time. Same with responsiveness. So these are all little things that I look for. That's not to say that like, every single amazing entrepreneur has a, response time to a text message that's like this, but I have certain, patterns that I've looked for over time that ultimately contribute to what I think is one of the most powerful things for any VC, which is their gut instinct.
No, I mean, it's interesting just to pull the string one more time because a friend of mine said, you look at, you were worried about, I'm worried about outsized returns also. It's just the nature of the portfolio.
Yeah,
And if you look at a lot of the outside performers, they're a little bit off. Like, I mean, Elon and Larry Ellison and Bill Gates and Steve Jobs, like you read their biographies. These are people that are a little bit off,
totally.
and in fact, often a lot off.
Right.
How do you think about when you're looking at someone and you are saying, is this going to be one of the billion-dollar plus outcomes?
Yeah.
How do you sort of navigate that? Who you and I might have admired going into public service is not necessarily the characteristics of the
Right.
person that we want to build something that has outsized results.
Totally. I mean, we're in the business of partnering and finding iconoclasts, and that means, a word we often use is they can be spiky. So you don't want to, I think if you have been in sort of high performer type environments, whether it's, in sports or in academia, you recognize that there is something anomalous to being a superlatively, successful. It's not, again, there's nothing normal about it. It is abnormal, it is unique, it is irrational, it is all of those things. So you look for that. You actually seek that out. That doesn't necessarily mean that it has to be a negative experience, though. So you can be, spiky, but you can also be respectful. You can be, deeply focused, but also be, a good leader. And so it's the balance of those things and being able to recognize those. One of the other things I look for, which I think is really important, is the ability to communicate. To be a good orator, to be an excellent, wordsmith. Again, there are incredible, incredible entrepreneurs out there who are not those things, but it's something that I like to see. And here's why. Number one, it de-risks your ability to fundraise later down the road. You and I both know how important storytelling is to fundraising. Secondly, de-risks your ability to hire. You need to be able to recruit. You need to be inspiring and visionary, and not just to hire, but to retain. It also de-risks your ability to sell. You need to be able to sell to customers. You need to develop a brand and a presence. So it's one of the most important things that I look for as well. And it's a skill and a muscle that you can gain, and it can flex over time, but there is some element of that is important, and innate.
Tell us a quick story. What's the best pitch? Just you knew within 10 minutes you were onto something, and what made it so?
Ooh, I mean, I'll tell you, some of the best pitches were not actually pitches. They were, we're in the business of not just receiving, but in seeking out. And so if I think through, some of I'll talk through two seed investments that I did. Both of them were individuals that I had my eye on for years. In fact, both of them I tried to recruit multiple times to be leaders in my existing companies. And as soon as I saw that there was a seed of an idea brewing, I needed to be there right away. And so that's really how I think about early stage. It's about the people, not the pitches. And we kind of think through the pitches together. And those two companies are one I've already mentioned, Summer Health, founded by Ellen De Silva, and another one called Trial Library, founded by Dr. Hala Borno. I had known Ellen for 2 years, tried to recruit her repeatedly. I had known Hala for almost a decade. She became a close advisor and a diligence call whenever I was looking at anything in the clinical trial space. And so I was there and didn't let her pitch anyone else before I gave her a term sheet.
What is the biggest mistake you see founders make over and over again in trying to fundraise?
Frankly, myopia around the next round and really just like optimizing for short-term valuation. Like we saw that so clearly in the last few years, that even the most, successful multi-billion dollar companies were seeing down rounds. And those companies and those founders who were more thoughtful and more focused on the long term, who recognize that these valuations don't mean anything until they do, we're able to sort of power through those difficult times a little bit more easily. The other thing I would say is trying to please everyone. That's not going to happen. So if you are in a lucky situation where you have so many different offers, I've seen some founders try to just like give a little bit here, give a little bit there, and then no one is fully bought in and nobody considers them to be a key part of their portfolio and nobody takes ownership. And then when things get difficult, what do? Well, so that ends up being a problem as well. And then finally, optimizing for brand or logos more so than individuals. And you and I know this well, that when you partner with a VC, you get what you sign up for and you get the person. And there's not necessarily consistency across the firm in that case. And you want to, make sure that you are, that you have chemistry with that individual. Oftentimes I've seen a lot of firms sort of promise the world and not deliver it. And so making sure that there's really strong mutual diligence.
How do you feel then, once you've made your investment, to really be the best board member you can, to be truly helpful to that entrepreneur? And where does the board screw up? A couple of questions have been that a lot of times with these boards, really, I sort of have a thesis that boards can't help you win, but they can actually help you lose. And so what is it when you think about it, you get the investment, you're in, what's your job and your role as a great board member for the woman or man running the company you bet on?
I agree with that quote, by the way. Absolutely. I think that it depends on the stage again. I have a very different role that I'm playing in a seed stage company than I'm playing with a later stage one. But one thing that's consistent is, you're a coach. You're a coach. Sometimes you're a therapist. Sometimes you're a friend, but not always. You need to be able to also have this sort of balance, the checks and balances there. That is part of your role. Governance and fiduciary responsibility, these are parts of your role. Again, in the early stage companies where the board is me and the founder, like you help give them a sense of team. They're not alone. This is a very lonely job. A big part of what we do is also to use our convening power. So whether that is in sales conversations, for example, you're a startup pitching to a hospital. They're inundated with these, but they love talking to VCs. They see us as filters who can help them to navigate that. So we can help, and I've done this repeatedly with many companies to sometimes open doors and sometimes close the deals, multi-million-dollar deals that help them get to the next stage. We help with fundraising, but we also have to ask the hard questions and really challenge founders and CEOs to grow, just like they should be doing for their teams.
We're in this interesting era coming out of COVID where a debate is, where can teams be? Do you have a thesis on that as an investor? Do you want to see, particularly in the early days, everybody in the same place? Or do you believe we've entered a new era where talent is everywhere and the woman or man running the company should just simply find the best talent they can, no holds barred?
Yeah, I mean, I don't think that's my decision to make. I think it's the CEO's decision to make. And I can certainly, I don't have a universal view on this. I know some folks do. I've seen tremendously successful companies fully remote, and I've seen tremendously disastrous companies fully in person. So I think it really just depends. But I will say, again, being authentic to the company. I think we're in a little bit of a different era than we were in the height of COVID, where everybody was hiring all over the place. I personally believe that it's important to have some in person, and that doesn't necessarily mean in the office. I think, some of these companies do quarterly offsites and things like that, but connecting with we all seek those connections, and I seek those connections. I really prefer, I don't always have the luxury of doing this, but I very much prefer to spend time in person with someone before I commit to, spending the next 10 years on their board. So I don't underestimate the importance of the in-person connection.
But it's not dispositive. You would, if you saw an all virtual company, even early on, you'd want to hear the woman describe why she's doing it. It would not be something you would judge one way or the other.
I wouldn't judge it one way or the other. I try not to be too dogmatic about these things. I mean, certainly there are some areas that I would never invest in because I'm unethical, I feel they're unethical or they're not making the world a better place. But I try to be open-minded and at least hearing the story.
We've gotten a little bit of questions, several questions about risk tolerance and in this new era. Some people, everyone in the press is just ridiculous in my view about technology, right? I mean, they paint with broad brushes. They don't necessarily understand what they're doing. They're sort of an anti-tech meme too often, at least in my experience. And I'm wondering, do you think that risk tolerance is different in Silicon Valley? And do you think it's different in other places in the world that you look?
I think of Silicon Valley less as a geography now and more of sort of a way of thinking and a state of mind. A lot of my companies are not based here. Many of them are. I have a ton in New York. I have a ton in, they're all over in many cases. One company I can never keep up with where exactly they physically are. They're always all over the place. So, but yes, I think we are in the privilege of taking risk. That's what we do. That's what this job is. And so absolutely, there is more of a risk tolerance. There is still this sort of idea of having a bit more respect, if you will, or a bit more sort of a badge of honor if you were part of a failed startup, more so even than going to a top school in some cases. You see a lot of folks who are sort of anti-MBA or anti-McKinsey, or anti so and so. Again, not the case for me because I've seen amazing companies that have come out of those places, but risk is rewarded here.
Do it quick because you touched on a little bit about it, companies being everywhere, and obviously, as you mentioned before, you and I met really in the days of thinking about the Middle East, and I'd love to do a lightning round, touring the world with you a little bit. So,
Sure.
would you and Lux invest in a Chinese company?
Based in China? Probably
You're
not.
probably not. If you had to choose a company, all things being equal, between Europe and UK, are you agnostic, or is one a better ecosystem from an investor's perspective?
Between US and Europe, UK, or Europe and
No,
UK?
wonderful question, but let's just do Europe and UK now, and then you can add US.
I mean, I think even putting Europe as a monolith is hard because it really depends on where. So I would sort of interrogate the dichotomy there.
Which countries interest you in not American West as an ecosystem for which purely as an investor, we all know talent is everywhere,
Yeah.
but as an investor putting her money in with an expectation that there's not too much ankle weights for the person to grow,
Yeah.
and then you can get your money out. What would
We
be
have
a
been very vocal about our excitement and interest in Japan, as an example. We have a company called Sakana AI that we led there, and we've been spending a lot of time in Japan. There is some really interesting things happening in France right now, and there have been for a while, and even companies that are not based in France, but that were started by French talent, like Hugging Face, for example, folks coming out of Polytechnique. We have some UK-based companies that are really interesting. There's talent coming from all over, but those are some examples right now.
3 years ago, a lot of them would have had UiPath is a perfect example, Romanian company, but they eventually moved to America. And you and I have sisters and brothers in Silicon Valley who believe the best companies eventually will move. Do you believe in that thesis?
I think I don't know about, again, being dogmatic here, but I do see that I mean, there are some amazing companies right now that are still based elsewhere. I will say there are always exceptions to every rule, and it depends on the market. If you're selling to a market here, it's helpful to have presence here, not necessarily, move here, but have a strong presence here. And so I think that it is important, but I don't, believe that it's the only thing that works.
I hate the term global south. It's just a paintbrush that I feel just is terrible. And yet it's an easy thing to use overall. When you look at the markets out there, South Asia, Southeast Asia, Middle East, Latin America, Africa, anything, are you guys looking a different way than if we talked about this 3 years ago?
Um, Again, context specific. I still think there are amazing companies coming out of there. I've never been interested in sort of the, rocket internet copy paste type model. Perhaps 10 years ago, I mean, there are companies that did well coming out of that, but I think that there are certain types of opportunities that make sense in certain contexts. And that's the case in the US, and that's the case globally. And so again, whether it's incredible access to talent coming out of France, whether it's sort of the diaspora from the broader Middle East that's going to Dubai, whether it's, incredible, opportunity in Africa, in South Africa, that's bringing together different folks from across the continent there as well. There are a lot of those examples, but we also can't ignore geopolitical risk because we know that can have a tremendous impact on things, as well as broader financing risks down the road. So a few years ago, there was a lot of excitement. You and I know well, and investing in certain areas. A lot of those firms have pulled back, even from investing in their own geos, let alone in other geos. So those are things that we think about.
we have here obviously 60 budding entrepreneurs who care tremendously about Pakistan. It's interesting. Some of the better Pakistan companies I know, they still are committed to Pakistan. They care for all the obvious reasons about the talent and opportunity, but in somewhat response to the macro, but also in response to funding, they've got plans. They've got a Saudi plan, they have a UAE plan, and of course maybe an American or German or whatever.
Yeah.
How do you what would you say to these great entrepreneurs who are incredibly talented and care tremendously about Pakistan, but also, like all of us, are kind of global day one? How would you advise them?
I think it's similar to how you think about not just geos, but like if you're building a product for a certain, for a certain demographic or for a certain sector, you can't boil the ocean all at once, right? It very rarely works like that. It's hard to be a platform and to be everything for everyone. So I will say that, being successful and then expanding from there, again, could be a geo, could be a sector, could be a use case, is really important. And so we have plenty of examples of that. Also, ultimately, you want to be able to expand your TAM. If whatever you're building in has a massive opportunity in Pakistan alone, and that could be venture backable, great. If it requires expanding beyond that, and so be it. I would also say, I think Ali wrote on the chat here that we have invested in a few diaspora companies like Applied Intuition. That is absolutely true. As you remember, Chris, this sort of idea of diaspora entrepreneurship was my passion and something I helped start at State Department. There's such a long history of immigrants sending remittances back to their countries of origin, and that will continue, and that always will. But I always felt that there was an even bigger opportunity in generating talent and generating opportunity and in encouraging entrepreneurship among those communities. And so we happen to have incredible folks from the Pakistani diaspora in our portfolio and from many other geographies as well. One of the companies I mentioned earlier, Waymark, was started by Dr. Rajayi Batniji, who was born in Gaza.
Marvelous at every level. And I must tell you, in my travels, I always thought that this was one of the great missed opportunities with the Iranian opportunity within Iran, but also in a bridge building with the Iranian diaspora. And the playbook is clear. We've seen it happen in many ways where it's a real win-win.
Absolutely.
And hopefully that will continue in Pakistan and the Middle East and beyond overall. Sadly, we're starting to wrap with time. I want to ask one question about VC, and then I want you to dream a little bit out if you could. And I want to thank everyone again for their great questions in this conversation. You are somewhat of a specialist, even though you have so much generalist background. Do you think VC is becoming more and more specialist? Like you need to be a quote unquote healthcare VC or pick whatever the sector might be. Do you think that there's room for generalists, particularly maybe at different stages of when people invest?
I mean, technically, I believe I'm a generalist. I certainly don't have a medical degree or or I've even studied biology. I have a deep interest in that space, and it came from my own experiences. But I try to stay a generalist because you don't want to limit yourself to a certain sector too much. That being said, I do think it's there are industries where you got to have a certain level of expertise to be able to really diligence an opportunity, to have a network to help support them, and so on. But I'm a deep believer in the range. To quote a book that I'm a big fan of being a generalist.
I'm with you, by the way, and so we may have bias, but I think history is with us, at least so far. If you look out, well, one quick sort of operating question. The good news about a conversation like this is you have an incredibly engaged audience. The harder news for you is pretty much every one of them would like to contact you. How do you think about just the massive outreach you must get on LinkedIn and everything else? How would you advise, this is actually nothing to do with you per se, but when entrepreneurs have ideas, they do want to get in front of people and not get lost in the cacophony. Any advice to them?
Yeah, there are a lot of people who don't take any cold inbound. That I'm not one of them. I actually have been the person doing cold inbound at many different stages of my life. And I think someone who can really effectively nail the cold outreach is very telling of how they can do other things. So that being said, these AI generated emails, delete, delete, delete. Oh, cool. Look at that. Delete, delete, delete. If someone doesn't bother to even do 5 minutes of basic Googling, that's not going to go anywhere with me. And so that is actually very much a pet peeve. If there's something that is literally online on a website, like you and I both know VCs love to talk. They love to talk. They love to tweet. They're on a zillion different podcasts. Many of them have written a lot like you and I have. All those things are publicly available. So some of the few times that I will respond to cold messages, it's when someone has actually already done their homework and they're not asking me to regurgitate something that I've already said publicly. And then they want to, there's something unique and insightful that they want to add or that they want to get.
Nasser, thanks for that question. I think it's very important. It's a fantastic answer. Do your homework. Frankly, it's good advice for almost any engagement you have in what you build and how you interact with money. Last question I want to ask you is to kind of look out in the future a little bit. I had a fascinating conversation. A young guy that I mentor has been a quant on Wall Street for about 3 years. Brilliant young guy, nerdy, kind of looks at the computer all the time, and doing quite well, making a lot of money. And he called me up to get advice because he wanted to leave quant and go to either VC or PE. And his reasoning was fascinating because it wasn't just sort of, I want to be a VC. His reasoning is, I do quant work every day and I use GPT every day. And I know that in 3 years, I'm out of a job. I want to go to a business where human touch is incredibly important to the business being developed and cultivated. And as I think you've articulated and have lived so well, your human touch, your engagement with people, sizing up people as people, and in a mutual sense, I think has been one of your superpowers. If I'm interviewing you 10 years from now, what is VC going to look like? Is it going to be a human? Is that still the asset in the end? And wherever this technology may go, forget 10 years, 5 years from now. How do you think VC is going to change structurally with all that you've seen and experienced?
I think it's going to be like other industries that are inherently human. We've talked about healthcare being one of them, where hopefully it is enriched and it is made more efficient and more effective through the use of technologies, but it remains deeply human at its core. That's obviously self-serving. I don't want to be out of a job, but I do think that is the path forward.
There's no gift a human being can give another one that's more important than their time. And there's that gift is compounded by the wisdom and learning that they share. And I think what you've done for this audience today is just so typical of you over the decade I've known you. And on behalf of Ali and Paklaunch and thanks very much for spending this time and sharing so much.
My pleasure, Chris. So good to be in conversation with you. And I think it's been well more than a decade at this point. We're coming up on 2.
I don't want to hear it. I don't want to hear it. Thank you, Ali, and thank you, audience. And we'll go from there. Good luck to everybody. Thanks again.
Take care. Thank you.